These are the shocking numbers behind Florida's insurance market collapse that reveal why 1 in 5 homeowners are now gambling without coverage. Florida's property insurance market isn't just struggling, it's in complete crisis mode. The data paints a picture that's far worse than most people realize. We're talking about a state where the average homeowner now pays over $6,000 annually for insurance coverage, more than triple the national average. Major national carriers like Farmers, Progressive, and AAA have either fled the state entirely or dramatically reduced their coverage. 6 insurance companies became insolvent in a single year. But here's what makes this story truly alarming. Despite paying these astronomical premiums, Florida homeowners are watching their claims get denied at unprecedented rates. Some insurers are denying 3/4 of all claims filed. Even Citizens Property Insurance, the state's insurer of last resort, denied more than half of its claims last year. So how did we get here? And more importantly, what does this mean for Florida's future? The roots of Florida's insurance catastrophe stretch back years, but the perfect storm really began brewing in 2017. That's when the Florida Supreme Court made a decision that would fundamentally reshape the insurance landscape. The court ruled that when policyholders won lawsuits against their insurers, attorneys could be awarded 2 to 2.5 times their hourly billing rate. This might sound like a technical legal detail, but it unleashed a litigation tsunami. Florida accounts for only 9% of the country's home insurance claims. But here's the jaw-dropping statistic. 79% of all home insurance lawsuits in America are filed in Florida. Let that sink in. Nearly 4 out of 5 insurance lawsuits in the entire country happen in one state that represents less than 10% of claims. The numbers get even more staggering when you follow the money. In 2019 alone, insurance companies spent over $3 billion just fighting these lawsuits in Florida. That's $3 billion that wasn't going toward paying legitimate claims or keeping premiums affordable. Instead, it was funding what Governor Ron DeSantis called a judicial hellhole due to excessive litigation and a legal system that benefited the lawyers more than a lot of people who are injured. Much of this litigation explosion centered around something called assignment of benefits, or AOB. Here's how it worked. After a storm, contractors would show up at damaged homes and convince homeowners to sign over their insurance benefits directly to the contractor. The contractor would then file claims, often inflated ones, and if the insurance company balked, they'd sue. With those attorney fee multipliers in place, it became incredibly profitable for lawyers to take these cases, even marginal ones. The result was a feeding frenzy. Legitimate storm damage claims got mixed in with fraudulent ones. Insurance companies found themselves fighting an endless stream of lawsuits, many of them frivolous, but all of them expensive to defend. And every dollar spent on litigation was ultimately passed back to homeowners through higher premiums. But litigation was only part of the problem. Florida's unique vulnerability to natural disasters created the other half of this crisis equation. The state has experienced billion-dollar disasters an average of 4 times annually over the past 5 years, up from about 1 each year in the 1980s. Hurricane Ian in 2022 alone generated over $21 billion in insured losses, making it the most costly storm in state history. When you combine explosive litigation costs with massive storm losses, the math becomes unsustainable. Insurance companies had underwriting losses exceeding $1 billion in both 2020 and 2021. The industry posted another $1.52 billion loss in 2021 and $1.8 billion in 2022. These weren't sustainable losses that companies could absorb indefinitely. The exodus began. Between companies going insolvent, limiting their risk, or leaving the state altogether, Florida lost over 30 insurance providers. In 2022 alone, 6 insurers were declared insolvent. St. John's Insurance Company in February, Avatar Property and Casualty in March, Lighthouse Property Insurance in April, Southern Fidelity in June, Weston Property and Casualty in August, and FedNat in September. Major national carriers started pulling back. Farmers Insurance announced it would no longer offer new business or renew policies in Florida. Bankers Insurance Company, AIG, and Lexington Insurance followed suit. Even companies that stayed dramatically reduced their exposure or stopped writing new policies. As private insurers fled, homeowners had fewer and fewer options. Many were forced into Citizens Property Insurance Corporation, Florida's state-run insurer of last resort. Citizens wasn't designed to be a major market player. It was meant to be a safety net for truly difficult-to-insure properties. But as the private market collapsed, Citizens ballooned from around 500,000 policies in 2020 to a peak of 1.4 million policies by 2023. This explosion in Citizens enrollment created a whole new set of problems. Citizens operates differently from private insurers. Its losses are ultimately backed by assessments on all Florida insurance customers, and even some out-of-state policies. If Citizens faced major losses from a catastrophic hurricane season, every policyholder in Florida could be hit with special assessments to cover the shortfall. Meanwhile, premiums were skyrocketing across the board. From 2019 to 2021, average premiums rose from $1,988 to $2,437. But that was just the beginning. Between 2022 and 2024, Central Florida homeowners saw premiums increase by roughly 40%. Statewide, cumulative rate increases over the past few years have reached about 30%, with some areas seeing even steeper hikes. The most recent data shows Florida's average homeowners insurance premium has reached eye-watering levels. According to various sources, the typical Florida policy now costs anywhere from $3,815 to over $6,000 annually, depending on coverage levels and location. That compares to a national average of around $2,181. Some projections show Florida premiums continuing to rise, with expectations of another 9% increase in 2025, reaching an average of $15,460 annually for comprehensive coverage. But here's where the story takes an even darker turn. Faced with these crushing premium costs, a growing number of Florida homeowners are making a desperate choice. They're going without insurance entirely. Recent studies show that 15 to 20% of Florida homeowners are now uninsured. In some counties, the numbers are even worse. Miami-Dade County has 23.5% of homes without coverage. Broward County has 22.7%, and Lee County has 17.9%. These aren't just statistics. They represent real families making impossible financial calculations. Take David Schroeder Sr., a Melbourne homeowner who canceled his policy in 2010 after successive premium hikes. He's been self-insuring for over a decade, gambling that he can save enough money to cover any losses out of pocket. Florida insurance consumer advocate Tasha Carter captured the human impact. Homeowners' insurance options in Florida have become more and more limited, and consumers are facing dire consequences. Congressman Maxwell Frost put it even more bluntly. Florida's property insurance crisis is pushing families to make impossible choices. I've heard from Central Floridians that they are foregoing coverage altogether because they can't afford both health care and property insurance. The implications of widespread uninsurance extend far beyond individual homeowners. Mortgage lenders typically require insurance coverage, so uninsured properties can face foreclosure. The housing market itself becomes destabilized when potential buyers can't obtain affordable insurance. Property values can decline in areas where insurance becomes unavailable or prohibitively expensive. Recognizing the severity of the crisis, Florida lawmakers finally took action. In May 2022, Governor DeSantis signed SB 2D into law, calling it the most significant reforms to Florida's homeowners insurance market in a generation. This was followed by even more comprehensive reforms in December 2022 with SB 2A, which effectively ended one-way attorney fees and invalidated assignment of benefits for policies issued after January 1, 2023. The reforms didn't stop there. In March 2023, Florida signed House Bill 837 into law, introducing sweeping changes to the state's civil litigation system. These tort reforms were designed to reduce the litigation abuse that had plagued the insurance market for years. The changes were dramatic. The new legislation eliminated the attorney fee multipliers that had made insurance litigation so profitable. It invalidated most assignment of benefits contracts, cutting off the pipeline of contractor-driven lawsuits. It reduced the statute of limitations for property insurance claims and made it harder for attorneys to collect fees in insurance disputes. Industry supporters argue these reforms were essential and are already showing results. Personal insurance litigation in Florida fell nearly 25% in the first half of 2025. Mark Friedlander from the Insurance Information Institute said, "The industry is in a very strong financial position, the best in more than a decade. We expect stability to continue in 2025. But critics argue the reforms went too far in favor of insurance companies. Under the new legislation, policyholders who win lawsuits against insurers can no longer recover attorney fees, making it much harder for homeowners to challenge claim denials. Consumer advocates worry this has tilted the playing field too heavily toward insurers. The numbers on claim denials seem to support these concerns. People's Trust Insurance Company denied 3/4 of all claims filed in 2024. Slide Insurance Company closed more than half of homeowners' claims without payment. Even after the reforms, Florida insurers deny more claims than insurers in any other state. There's also the troubling issue of rating agencies. Research from Columbia Business School found that insurance companies rated by Demotech, a smaller rating agency used by many Florida insurers, were 30 times more likely to become insolvent than those evaluated by major rating agencies like AM Best. Between 2017 and 2025, 17 insurers declared insolvency within a year of receiving A ratings from Demotech. As one researcher noted, almost all insurance companies rated by Demotech receive an A rating, even though many of them become insolvent a month or two after their latest A rating. We found that a lot of them would have had a lower rating if they were rated by AM Best. Despite these ongoing concerns, there are some signs of improvement. Florida's Office of Insurance Regulation reports that 12 new property insurers entered the market in 2024, bringing over $418 million in policyholder surplus. Citizens Property Insurance has begun reducing its massive portfolio, transferring 428,000 policies to private insurers in 2024 and reducing its total exposure by nearly $200 billion. By September 2025, Citizens was down to approximately 772,000 policies, still massive by historical standards, but a significant improvement from its peak. And here's some encouraging news. Citizens announced a 5.6% rate reduction in February 2025, the first decrease after years of increases. Some private insurers have also filed for rate decreases, with the Office of Insurance Regulation receiving 73 filings for rate decreases and 94 filings for 0% rate increases by late 2024. Even the 2024 hurricane season, which brought both Hurricane Helene and Hurricane Milton to Florida, didn't trigger the widespread rate increases that many expected. Combined insured losses from both storms are estimated between $35 and $55 billion, yet the market has shown more resilience than in previous years. But challenges remain enormous. Reinsurance costs, the insurance that insurance companies buy to protect themselves, have exploded. Florida reinsurance rates increased between 45% and 100% in January renewals and another 20% to 40% in June. As Mark Friedlander noted, as a homeowner, approximately 40% of your premium bill is reinsurance. The fundamental question facing Florida is whether the recent reforms can create a sustainable insurance market. Industry observers remain divided. Weiss Ratings took a pessimistic view. What we need is a complete revamping of the structure of the insurance industry in Florida. We effectively have to build the market from scratch. Others are more optimistic, pointing to declining litigation, new market entrants, and stabilizing rates as evidence that the worst may be over. But even optimists acknowledge that Florida homeowners will likely continue paying well above national average premiums for the foreseeable future. The Insurance Fairness Project argues that the market-friendly reforms have failed to stabilize the state's insurance market, instead reproducing many of the same conditions that left homeowners exposed in the last crisis. What's clear is that Florida's insurance crisis represents a cautionary tale about what happens when litigation abuse, natural disaster exposure, and regulatory failures combine. The state's experience offers lessons for other coastal areas facing similar pressures from climate change and legal system challenges. For Florida homeowners, the crisis has fundamentally changed the economics of living in the state. Insurance costs that were once a relatively minor household expense have become a major budget item, sometimes exceeding mortgage payments. The choice between adequate coverage and financial survival has become real for hundreds of thousands of families. The data reveals a market in transition, no longer in complete freefall, but still far from stable. Whether Florida can build a truly sustainable insurance market while maintaining its appeal as a place to live and work remains one of the biggest challenges facing the state's future. For now, Florida homeowners continue to navigate a landscape where the cost of protection has never been higher, and the consequences of going without have never been more severe.